But let's talk commodities, currencies. Manisha is now joining in as always. Manisha.
Thank you so much for that. When I'm looking at precious metal prices, because we've seen a sharp decline onto that one in the overnight markets. And when you look at a week-on-week basis as well, this is a week where we are looking at gold and silver both headed for a decline there. So this is what silver has done. It's down 7% in this week. With that, it's 16% down on a month-on-month basis. And for the year as well, it has turned negative to nearly 22%. Pretty much the same scenario for gold as well. So while it's 8-month lows for silver, it is near 8-month lows for gold as well, with 3% of a decline coming in this week. Gold is now down 5.5% on the month, and for this year we are into the negative by nearly 8%. When you look at the overall chart on what gold prices have done in this year, we started this year with $43.30 an ounce. We went on to make an all-time highs of $56.08 an ounce by Jan 28th itself. So January as a month was very, very strong when it comes to gold and silver, both of those commodities there. But currently we are trading at $39.80. So not just that we're below $4,000 an ounce, we definitely are into the negative for this year as well. So 8-month lows, as I said, is where we are holding on in sense of gold prices therein. And this is a kind of decline or a negative year that is coming in after many years. The last time we saw this kind of a negative perhaps was in the year 2021. In all of these years, we've seen very strong gold prices continuing. Last year was 70% of gains, and as you can see, 8% of a decline in this year till time. Interestingly, on why have the gold prices continued to decline? A question that many are asking, given the fact that we have seen geopolitical tensions, we also have seen concerns in equity markets, but even then the gold prices have continued to decline. One, that is because of the high crude oil prices. A lot of money seems to be rotating there, and then there is high crude-led inflationary concerns as well that the markets are dealing with. The surging Fed Reserve hike scenario, or bets, is yet another thing that is putting pressure on non-yielding gold in that sense. You also are looking at a multi-year high US dollar index trading around that 100 to 101 mark is a 14-month highs for the dollar index, also weighing on many of these dollar-denominated commodities. It also is about the rise in bond yields that we have seen in various major global economies weighing onto the prices. And then there has been institutional profit-taking, outflows that we have seen not just from ETFs but from funds as well, and some physical profit-taking as well. For the Indian markets, it's majorly about recycling, people getting in older gold to buy new in the physical market, also weighing on. And then on the charts, you have seen the gold prices break below $4,000 an ounce. A very strong psychological marker there that may lead to further profit-taking or declines coming in the next few days is what the markets are anticipating. What the street will now watch out for is the FOMC meeting in the month of July on 28th and 29th. New direction or new cues clearly would come in from that one. But let me also tell you on what various banks and brokerages have been telling us in sense of gold prices forecast from here on. Bank of America overnight has come in with a report. They say that modest accumulation below $4,000 an ounce is something they're advocating. But they also say that downside risk to 3,700, 3,600 on the lower side are quite open. And if these levels also are not able to hold on, then you perhaps are looking at 3,450, 3,250 kind of levels as well. Remember, when the gold prices started the current rally, it started from 3,250. That is where the Bank of America believes that you could be looking at a very, very strong support coming in. I also spoke to Max Layton of Citi very recently, and he said that the gold prices could go down to $3,500 an ounce over the next 4 to 6 weeks. But he also says that he's not saying that you shouldn't be a part of gold. Actually, these levels, the declines would be very strong levels to start accumulating in sense of gold. Similar statements coming in from HSBC as well, where they say that 3650 to 3930 is the kind of levels that you could be looking at. Deutsche Bank has talked about 5,000 in 12 months, but they also believe that 4,300 by the end of this year is a possibility. JP Morgan has talked about 4,500, Goldman Sachs 4,900. Morgan Stanley has talked about 4,800 and 4,600. ING also believes is what you could be seeing by the end of this year. But before that, a bit of a pullback is not ruled out.
Thank you very much for that.
For over 25 years, CNBC TV 18 has been the guiding force for investors, steering them through the markets.
Start your trading day with cutting-edge insights and expert analysis.
Seize every opportunity by decoding the forces that drive the market.
Equip yourself with strategies and guidance from India's biggest market mavens.
Invest with confidence as we beam live from the CNBC TV 18 Motilal Oswal studio.